Welcome to the Rick Fuller Podcast, presented by Rick Fuller, team leader of the #1 real estate team in the San Francisco Bay Area and Sac County for most recent sales, according to Zillow. Rick is a community leader, real estate coach, and real estate investing expert. I'm Christina Morales, a writer and marketer, and Rick is my dear friend and mentor. Today, we have a topic that many investors are interested in, renting or flipping, which provides the best return. To help us explore this strategy, we have one of my favorite people, Joe Seeley, on the line. Joe is the director of conversion on the Rick Fuller team. He's brilliant when it comes to entrepreneurship and marketing, and he's had many successful investment properties over the years. So thanks for joining us today, Joe.
I'm excited to be here.
So Rick, we've talked a lot about finding the right person to partner with in real estate investing. And I know that Joe and his incredible wife, Shelby, have partnered with you on several properties. Can you tell me a little bit about Joe and your history as real estate investors? There's a lot of get rich quick schemes out there, and I know this isn't one of them. So I want to know what you guys have to say about this.
Well, Christina, we do this podcast weekly, and on this topic, I cannot think of a better person to have on this podcast and on this video than Joe Seeley. Both Joe, Shelby, we've been great friends for many years. We've operated both in the nonprofit, some things at the church, and then also in business together. And Joe and Shelby and I, we have bought lots of properties, including properties that we have held and we own today, and properties that we have flipped. We bought them at auctions in ballrooms. We bought them through foreclosures. And unlike your late night infomercial, where the infomercial is selling you a CD or a download, we're just going to tell you what we've done and what real estate investing actually looks like. We don't have any CDs or downloads to sell. It's really about just educating people on how they can be a real estate investor. It doesn't have to be overwhelming. It doesn't have to be something that's so mysterious. And thus far, Joe, we've had the privilege of serving 1,000 families that have invested in real estate.
Yeah.
And so we've done it ourselves, and then we've helped others do it. And that's what the purpose of today is. And so if you've got questions, put them into the comment section below or type them in. We'll try to get to them. And Christina, thanks for facilitating this.
You know, one of the unique things too, Christina, I think is funny is that many people want to get into real estate investing. I remember being an 18-year-old kid and going to, I was coaching football at the time, and the gentleman that was the head coach, he lived in Clayton, up on Eagle Ridge, right? Overlooking Oakhurst Golf Course, right? Beautiful area. And I was walking through his house as an 18-year-old kid with my eyes this big, saying, hey, what do I have to do, right, to own a house like this? And it was interesting because at the time, the guy actually, Rick, is a Jewish guy who worked for the IRS. There's no joke in that. But he looked at me and he said, young man, if you want to own a house like this, I'm going to teach you exactly how to do it. So I was all ears, 18 years old. I knew that I wanted to buy and own real estate because my family hadn't growing up. We had moved so many times. We moved 17 times when I was a kid. And so I knew something about having a home that was actually mine was going to be something that was super important in my life. And what he told me is he told me to buy the biggest piece of junk I could that I would be willing to live in for 2 years. Yeah. And he said, Joe, if you live in that house for 2 years, get all your money together. And he even told me back then it was like put 20% down, and there were reasons why he told me that. And he said, after 2 years, sell that house and then take every dollar you made and put it into your next house. Don't take any equity out, just put everything in. If you do that 6 times in your life, Joe, you'll have a house like this one day. The unique thing was I did exactly what he said. I was 18 years old, and I actually put the down payment on my first house rate when I was 20 years old. Now, I didn't buy the ugliest thing because I married the most beautiful woman in the world who would not live in the ugliest thing. What I did, though, guys, is I slept in my car for 3 days. You remember this?
I do remember it.
I slept in my car for 3 days just to be in line to be able to purchase a home that I ended up buying. And actually, Rick, that was the first transaction that you helped me with, is when I sold it. which ended up being one of the first
over 15
transactions
years ago
you did in real estate.
It sure was. Well, and Joe brings up what I think is the great myth. The great myth from an investment property is that, you know, you start out buying your dream home. It's got to be everything that you want it to be, and you're not going to live in the home. And so how you would buy your primary residence may be very different than how you buy an investment property. And when you start realizing that, and the more money that you have invested into an investment property, oftentimes the more risk you have associated with that investment property. And so whether you're buying your first home or buying an investment property, kind of buying with the end in mind is really, really important. And what we teach, Joe, and we changed this maybe 5-7 years ago, when we would meet with somebody who wants to buy their first home, we don't just talk to them about the home that they're planning to buy, their very first home. We actually start talking to them about their lifespan of owning real estate and what that looks like. As Joe said, the investor said, if you do this 5 or 6 times, and we start talking about what 5 or 6 looks like in investing in their first home. And what we found is that it's a different conversation. It puts in a holistic perspective, and it actually outlines a strategy that we've had clients that are following since. And
but I found out too, and so did you, Rick, is that, listen, you've got to get in the game.
Yeah.
Like, you know, you say this all the time, not only real estate is hazardous to your wealth. And here's what I realized. I needed to get in the game. And at 18, I was like, how fast can I get in the real estate game?
Yeah.
Right. And so from that point to this, which is now 22 years later, I've bought, flipped, have rentals. We've done just about everything except for multi-unit, right? We've never bought a apartment complex yet. I always say yet. And we've never developed an actual housing yet. And so here's the thing that I realized. There's nothing that I've done in investment that's actually done more for my family's generational wealth than real estate. And so I know we're going to talk about some of our stories and some of the things that we've gone through. But Christine, thanks so much for actually inviting me to be part of this today.
Of course. And
Joe brought up,
go ahead.
Joe brought up a great point. And the great point is you got to get in the game. And I often talk to somebody and I say, well, you know, Rick, I want to get into real estate investment, but you know the market. Or Rick, you know the interest rates. Or you know and to me, you're not in the game yet, right? You're up in the stadium. And you got to make your way down to the field. Now, once you're on the field, now we can start talking strategy and what that strategy looks like. But it doesn't do us a lot of good to talk strategy when you're at the top of the stadium. You're in the nosebleed section. So get down on the field. We can start talking about strategy. What's the strategy to buy this investment property? And how are you going to do it? And what about down payment? And what about credit score? And what about, you know, rental income? And what's the AAA? What are all the things that we talk about? And you can do that when you get down on the playing field, which means you're going to do this thing. And now we can start penciling out the strategy and how to do it. And I think as you start crossing the 20-yard line, which might be your first home, the 40-yard line, you start crossing the 50-yard line, and you're heading towards the end zone, you start outlining what a strategy of life worth of owning real estate. What we found is that real estate investors, Joe, we found that they tend to fit in 4 categories.
Yeah.
The first one, you know, I call the real estate investor. They are the spectator. They're in the nosebleed section. They're observing the market. And they usually say to me something like, Rick, I wish I would have. 20 years ago, someday, one day, I will, you know, and they're the spectator.
Yeah.
And they never make their way down the stadium.
They talk a good game.
They talk a good game. As a matter of fact, it's the one that's never bought a new car, that's telling you how to buy a new car. It's the one that's had 5 marriages, giving you marriage advice, right? It's that kind of guy, right? That's saying, or gal, that they're the real estate spectator. They're just watching the game. Then you have another type. They're the real estate speculator. And they say, I'm going to buy the property here, and in a year, it must be worth this, and it must be worth that. And in 2 years, and 5 years, and 7 years, and it's all speculation. It's all guessing. It is all aspirational. It's hope. And there's not a lot of basis for that type of real estate investing. And so we see the real estate spectator become the speculator. And then we see the third type. And now we start reaching, I think, kind of a level of maturity when it talks about investing. And you start seeing the real estate investor. Yeah. And these are the people I love talking to. Because, Joe, you know me.
Yep.
You've known me for over 20 years. We've done life together for the last 20 years. And life, businesses, raise kids together and all of that. And I'm a numbers guy.
Right.
So I believe if you do the numbers will tell you what to do. And that's the real estate investors. Okay, if I rent it out, this is my cash flow, and this is my capitalization rate. We can start looking at it. So this is a good thing or not a good thing?
Let me say something about that, though, because here's the thing I will tell you. I'm not that guy. And I don't mean that I don't check the numbers. I do. But when you're getting into a real estate investment, having the right people alongside is super important.
Yes.
And so when I've invested with Rick, here's the thing that I've been able to do. I've been able to trust his expertise in the real estate market with my willingness to actually do the hard work. And I'm willing to take a risk. But when you have someone like a Rick on your team, or a professional who understands the real estate market that can give you, like you said, not numbers that come from presumption.
That's
Presumption will leave you broke. But numbers that are truthful. Matter of fact, one of the models we followed, Rick, we wouldn't even get into a house if there wasn't a 30% margin.
That's right.
Right? If there wasn't a 30% margin, then it wasn't a house for us. Now, some of you out there are thinking, wow, you guys must not have bought a lot of houses. Here's the truth. We may not have bought a lot of houses, but let me tell you what we've never done in real estate. This is super important because some of you listening have tried to invest and you've lost money. The truth is we've never lost money in a real estate investment we've made. Matter of fact, we set the market 4 times with different transactions that we got involved in because we were able to get the right property at the right time and having the right partner to make sure, because I'm willing to take a risk, right? And I'm willing to get out there. But when you have someone that's actually hedging your bet, right? I'm making a good bet and it's risky, but it's hedged by knowing the numbers. And like Rick said, when you know the numbers will let you know what to do. And so just so you know, this isn't, again, something where we just fly by the seat of our pants and go, oh, let's buy that house. Every single real estate property is actually a good investment at the right number.
It is. Everything sells at the right price. So you got your real estate spectator that's watching from the stands. You got the real estate speculator in hopes of simply appreciation. Nothing else matters but the rise of value of the home. You've got the real estate investor that knows the numbers and knows what to do. And then you have my favorite kind. And yes, there's a level 4, and they're the real estate collector. That they could look at different kinds of real estate and say, this one is a good buy and hold. This one is a good buy and flip. This is one I'll take a partner of. This is one I'm going to buy and I'm going to sell to this audience, or I'm going to rent it. Or they look at it and say, this would be a good Airbnb or a VRBO or a home away. It's a good vacation rental. And they're able to look at it. And at the end of the day, I call them the real estate collector because, you know, Joe, remember when you were kids and you might have Hot Wheel cars and you collect them, or baseball cards. You may have collected coins or whatever, but you had a collection. And some of the most mature real estate investors that I've had the privilege of working with, they have a collection of real estate. It's not just this one or that one, but they know what to do in those unique situations that's relevant for that particular property and that fits their goals. They're not getting into something that doesn't fit their goals, and they become a real estate collector. And now what happens is they've got a portfolio of real estate. They got a little bit of commercial. They've got some Airbnb. They've owned some property that is in state, out of state. They own large homes, small, a little bit of everything, and that becomes a healthy portfolio. You know, if you meet with a real estate or a financial advisor, you know, they're always talking about diversity. Well, real estate can provide that kind of diversity by buying different classes of real estate.
Yeah.
So you don't have to just stay single family. You don't have to just stay vacation rentals. You don't have to stay commercial or industrial or office. You can buy a collection of real estate, and in and amongst itself, it creates kind of a diversity.
Yeah.
Where not all the eggs are in one basket. You spread it out a little bit.
Well, we shifted because when we first started investing, when I first bought my first home, it was really all about the costs, right? So I bought that house based on the cost and the payment, right? And so many people, they get caught in that trap. But investors don't get caught in that trap because there's a difference between cost and value, right? I'm willing to spend a little more on a home that I know has a greater value for me and my family in the future. And so, for instance, many people are like, oh, let's just get quick pops of money, right? That's why flipping can be a great strategy, right? If you find the right home and you're willing to mitigate the risk.
That's right.
Right? So a lot of times people lose money in flipping because they don't mitigate the risk appropriately, right? And the truth is that a flip is just a big insert of money, and a lot of people do this well. Matter of fact, Christina, we were talking a little about HGTV, right?
Mm-hmm.
And how on HGTV they make it look like you can go out, look at one property, mind you, one property, walk through it, and go, man, I know they want 700,000. We should give them 640. And then in 30 minutes, I own the house. And in 45 minutes, I remodel it and sell it. Well, the reality is that's created the wrong mindset for many investors, right? And so the truth that you need to know is, hey, you've got to know the difference between the cost and the value. A flip is truly cost versus value today, right? Rick, when we did a lot of flips in the past, we would buy that house and you had a timeline that we had to have that house back on the market in 2 weeks.
Well, that's because time is money. You've heard that saying. And when you own real estate, there's the before cost. That's the cost to purchase it. Then you got the during cost, the cost to rehab it, the cost to keep the utilities on, the cost to even have the home, the landscaping and all of that that's associated. Then you got kind of the after cost. Well, what's the cost once I get to close escrow and actually sell the property? And the longer you drag out those during costs, those utility costs, and in various markets, we bought a home, Joe. I was thinking of a property that we bought in a market where it was the value of real estate was going down. And time was of the essence.
In a very bad part of our town too.
And so if I didn't sell the property in a reasonable amount of time, if I didn't buy it, make the repairs, if they were drug on, and I see investors and I bought it last year and I just haven't got a chance to finish the remodel or make the repairs, and they buy it in the wrong market and values are going down. It's what I call jumping over the dollars, looking for the pennies.
That one was funny too, Rick, because that property was one of the first properties we actually flipped together. And Shelby and I moved our furniture out of our house to stage the property.
Yes.
Right? We baked cookies. We did everything, right, that you taught us to do. We used every trick in the book, right? And the truth was we set the market with that house. In a market that was going down, we were able to set the market, and it was the highest price for that property, right, the same model in that area at the time. And so it was interesting, but it was because you did the numbers.
Yeah, because if you do the numbers, the numbers will tell you what to do. And Joe's right. You got to mitigate the cost. Or you got to mitigate the risk, right? So you got to know what you're going to get into, and you got to be able to itemize it. And a great real estate professional that you're working with can help you do that.
The other thing about that house that was amazing is it was actually a family that was in foreclosure. They were 10 days away from losing their house. And so we had the opportunity to go in to put a good offer, and we explained to them, hey, we are going to flip this house.
Yeah, we did.
And so we were honest up front. We did what was right for them, and actually it was also right for us. One of the things, if you're an investor, and Rick, we talk about this all the time, we do not buy a property that's not a win-win-win. Meaning we want the seller to win. If we're buying a house from them, we want it to be a win for them. It needs to be a win for us. And ultimately, if it's a flip or a property that we're going to hold, it's got to be a win for the person that buys it or rents it. And so we've always made sure that all of our properties are that way.
I think you have to, but Joe, when you say that, to me, I think most people think of an investment as like a win-lose, like somebody has to lose. And sometimes what we found is that the win-win is very deep.
Yeah. That
you got to really dig a little deeper. You got to uncover some things. You got to dig a little deeper. And if you do dig deeper, you can generally find a win-win for everybody. And when you have a win-win solution, boy, you sleep good at night knowing that it was a benefit to everybody that was associated with that real estate transaction. And today there are families that own these homes that, that's become where their family memories are. That's where they celebrate holidays. That's where birthday parties, that's where they eat dinner at night. That's where they have their flat screen TV. That's where they do life. And at the end of the day, we help provide a little better product on the market to do that.
Well, and then again, we get away from cost, right? You still don't want to overpay, but you get away from cost and you start looking at value. Matter of fact, one of the greatest value homes we ever purchased, we had to go through 1,500 homes to find one home. Now, for some of you, again, that HGTV model where you look at one home and it's the right one, that just hasn't worked for us.
And I think about the HGTV and, they say, I think I want to buy the property. And then like 2 minutes later in the video, they're like, your offer was accepted and now you're closed escrow.
Exactly.
And you're thinking, that never really happens that way. But
that one,
that's TV. That's Hollywood.
We actually took that we had 1,500 homes that were up for auction. It was 2009, I believe.
Yeah.
And here's what happened, guys. We took that 1,500 homes and we took that down to about 300 homes that we were even interested in. And it was because we were really specific about what we wanted to buy. And so if you're an investor and you're getting into investment, let me tell you, get really, really specific. Rick, you did a great job on this when we talked about it. We narrowed our focus to where if it wasn't a 3-bedroom, 2-bath, we didn't even look at it. If it was bigger than, I think, 2,100 square feet, we didn't even look at it. If it needed anything structural done to it, we didn't even look at it. So it took us going through a lot of properties at that time to when we ultimately got to that auction, we had, I think, 21 homes that we had set aside, and we had categorized them into, if we could buy these, they were our A's, our B's, and our C's. And then, matter of fact, Rick, when we got there, we had, I think, 8 A's, and you decided to leave all the other houses in the truck.
We did. Matter of fact, Joe, you went and looked at a lot of these homes prior to. I learned what it was that made a good investment property. So, Joe, these are the ones we're looking at. We went and looked at them, or Joe looked at those homes. Some of them were not on the market. This was during a time of foreclosures and auctions. And we took them and we prioritized them and said, these are the ones we're going to bid on. We actually had a paddle. Do you remember that?
Yes.
We lifted the paddle.
Rick didn't give me the paddle. Here's another hint for all of you investors. If you're the passionate, let's go guy, don't hold your paddle. Right? Because Rick would not overpay. He had a set amount that we had done the numbers, and if it went over that, we knew that someone else wanted to live in it, and we didn't want to live in it.
So we got to the auction, and Joe, you and I looked through all these properties that we had done the research. We had narrowed it down from properties that fit our criteria, then looked at several of them, and then we had made them, I think, A, B, and C priorities.
Yeah, that's right.
And we grabbed the A's, and I remember we took the B's and the C's, and I stuck them in the side console of my pickup truck at that time. Just stuck them there. We went inside to the auction. We just knew that these 8 properties, one of them was going to work. We got our paddle. We were ready to bid, and all 8 of those homes came up that day.
Yep.
And they immediately exceeded the price that we were willing to pay for this home, for all the homes, all 8 of them. And
were you looking just for one home to buy?
We had bought multiple homes that day, but we knew the numbers. I remember when I say, if you know the numbers will tell you what to do. And I knew what I was willing to bid the property up to. Once I got to a certain amount, we were disciplined to take the paddle down. We saw a lot of people there get emotionally involved. I will never forget it.
He was disciplined. I was like, $5,000 more. Come on, we can make it happen.
And they would get so emotionally involved that people would overpay for the property, and we knew what our numbers were, and all 8 of the properties, which were our A priority, came and went and overbid our maximum bid amount. We were happy to pay less, but we didn't want to pay more than the amount that we had identified, because we knew what those properties were needed, and we knew that they'd be great investment properties, because it was 1,500 narrowed down to those 8.
Yeah. And the unique thing that happened next, though, which was really fun for us, right, is we had done our homework, so we were ready to buy. That's another thing. If you're an investor and you do your homework, when it's time to buy, you can make a good decision because you have good information. So a property came up for auction, and I looked at the property, and I turned to Rick, and I said, Rick, they have that property up there, and they have it as a 3-bedroom, 2-bath, and it's actually a 4-bedroom, 2.5-bath. And Rick looked at me like, listen, you better be right, boy, because there's a big difference between a 3-bedroom, 2-bath and a 4-bedroom, 2.5-bath in the city that we were talking about, and specifically that neighborhood, because it was a relatively newer neighborhood that had just gotten hit after the market. And so I said, Rick, I walked through this house yesterday. They have it wrong.
But the problem was, it was those papers that I had stuck in the side console. So we didn't have any of our notes. And so Joe said, I know this is a 4-bedroom. And I knew that market. I knew it like the back of my hand. And I knew that if they were advertising it as a 3-bedroom at the auction, it was actually a 4-bedroom, that there was probably a $40,000, maybe $50,000 value increase as a result of it being a 4-bedroom. There's just more buyers that want a 4-bedroom than a 3-bedroom, especially that house was knocking on the door of about 2,000 square feet.
Yep.
And so we just knew that if we picked it up as a 4-bedroom, we'd be able to get a pretty good price if they were promoting it as a 3, and they were. And when they started the auction, and I'll never forget it, when they started the auction, I quickly did the math in my head. Okay, what do we need to put into this? What's our before, during, and after cost? And, you know, Christina, you and I did a complete podcast on what we call the AAA, how I value the properties. And we looked at it, and I knew that there was margin, and nobody bid on that property.
Well, no, actually, if you remember, Rick, we were bidding. Somebody else bid, and the auctioneer said that they had won.
That's
but
correct,
when they
yeah.
went to talk to that person, they said they were in at the same bid that we were at.
They started with no bids.
Mm-hmm.
They finally got a bid. The person then rescinded the bid.
Yep.
And then they came to us, and I said, Joe, how confident are you this is a 4-bedroom home? And he's like, I know, I was there yesterday. And so we bought the property.
Yep.
And we signed the papers, gave our deposit at that time, and things have changed a little bit now, but it was a non-refundable deposit.
$10,000 right now.
And you better be sure it was a $10,000 decision plus a commitment to buy the property. And Joe, I think we made a 40-yard dash out to the pickup truck.
Yes, we did.
We opened the door, and I looked at my notes, and we had bought it, which I had calculated that we had bought it at the right price. And the next was on our way to the property.
Because if you've ever bought a home that you said, hey, no, I know it's a 4-bedroom, and your partner was like, you better be right. I've never seen my friend drive faster in my life. But the good thing was, once we got to the property, it actually was a 4-bedroom, 2.5 bath. We actually got that house back on the market in under 2 weeks.
Yeah, we did.
And got it sold in a down market in under 40 days from purchase.
Well, and you mentioned it's a down market. What we mean by that is that values at that time were different than what they are today. Mm-hmm. And by the way, this is, I think, just a great conversation, because a lot of people are saying, what about the market? What about, And Joe, I'm thinking about all the properties that you and I have bought, we flipped, we sold, auctions, foreclosures. We bought them in every market. Mm-hmm. The market's going up, the market's going down, the market's sideways, the market's flat.
But that's because, Rick, you taught me the
rates.
difference between cost and value. So like that home, we actually had a real tough decision to make once we actually got that home cleaned up and ready to go. We had to make a decision because we were in a right position to either flip that home and make a substantial amount of money, or hold that property because it was a great home for a family to rent. We eventually flipped that property, but it was a property that actually allowed us to do both because the value was there for us to continue to grow as investors. And it's interesting. I think today, many times people are looking at the market, they're looking at interest rates. You and I have kind of talked about, we really feel like it's the perfect storm for an investor, right? You still got to do the work. It's not like, listen, if we're honest, are there flips all around us? No, probably not. To be honest with you, it's harder to find them. When you do find them, for you and I, they're kind of out of the range of what we want to do right now, because we want to get a house back on the market in 14 days. And the truth is, most homes today are going to take you a little longer, because if it's a flip today, guys, and it's on the market, it's going to need a little more TLC than normally you and I want to get involved in.
But one of the benefits to owning real estate, if you caught what Joe said, we had options. I think about if you buy stock or you buy a mutual fund, you got an option. You can buy it or you can sell it. And when you buy real estate right, you should have a strategy of what you're going to do. Don't buy it and then figure it out once you're on title. That's a bad strategy. But if you buy it right, you often have multiple options. And you might say, well, I want to flip it or I want to sell it immediately. But you could say, I want to put a long-term tenant in it.
Yep.
And there are certain markets that are now really strong. I can make it a vacation rental, or I could do an Airbnb, or I can, put an ADU unit on it, accessory dwelling unit. I can do all of these there. I can remodel it. I can put an addition on it, or I can just put it back on the market. And what's interesting about real estate is that it often gives you a variety of things that you can do. in addition to just buying and selling it. And you could use leverage on it, which would be financing. You buy cash. There's all kinds of options that you have. And where you're looking at other investment vehicles, if you look at a stock or a mutual fund, you've got two options. You buy it or you sell it. That's what your deal is, right? And real estate gives you these options. And when you buy it right, you should have a clear pathway. Don't decide once you own it. But you want to be able to have various options as you're going through the process. And because we own a property today that we actually own it, and we've been renting it out for several years, I don't think we've had much of a vacancy at all. Matter of fact, I think that our vacancy for the last many, many years we've owned the property is down to a less than 24 hours vacancy on that property. And that property didn't make sense to flip. It made sense to hold it. And I truly believe if I were to prioritize it, I think, I talked quite a bit about not owning real estate is hazardous to your wealth. Well, the greatest wealth position in real estate is that collector. It's that holding real estate. And when I started off in my 30s, Joe, even in my 20s, investing in real estate, boy, it was just about being on title. Like, I want my name on title. And in my 30s, I realized there's not a lot of value of having your name on title, because all that it means is you get the call when the fence goes down, you get the call when the toilet's overflowing, you get the call when the sink doesn't, drain. And in my 30s, I learned the value of owning paid for real estate, own it free and clear. And that's a game changer, because 100% of the homes that are foreclosed had a mortgage. And so if you I don't want to buy a home, I don't want to get it foreclosed, I don't want to then buy a property and move in a direction where you pay it off free and clear. And we teach you how to do that as well. And our team members all know how to do that. And I think that this is an important conversation. Today, we're talking about those that are intrigued with real estate investing. We believe every real estate agent. So if you're on this and you're listening to us and you're a real estate agent, and that's a lot of you, because a lot of the audience that listens to our podcast or watches our videos on YouTube, like, you're a real estate agent. That's great. You ought to be owning the product that you sell.
For sure.
Like, you should not. You can imagine if you go to the Apple store and he's like, yeah, let me show you how it works. Oh, no, I don't have Apple. I have a Samsung. Like, you're at an Apple store. You want to own the product that you believe in, the product that you sell, the product and there's a greater level of understanding when you live in it, when you own it, when you have it, that it's yours. And when you're, as a real estate investor, Joe, when we change the conversation to, Joe, this theory or this strategy, or here's what I heard other people are doing, to, hey, let me just share with you what we are doing. And if you're open to it, like, I'll just share with you what we're doing. That change for a real estate professional is what I call the catalyst in their business. It's not any longer a theory, a strategy, a hope, a wish. Somebody told me I bought this free CD set, whatever, I bought this CD set, or I got these free downloads. It's now, let me just share with you what I'm doing and see it may be helpful to you. And as you're a real estate collector, you can say, I'm doing a little bit of this over here with this product and this product and this product. And you can provide an authentic, genuine, real, and transparent way that people can invest in real estate.
Here's one of the other things that was super unique about us investing together. We knew that we wanted to teach our kids. And some of you guys are out there and you may have young kids. And we knew we wanted to teach our kids how to actually invest and how to use real estate like we were. But we didn't want them to wait till they were 20 or 30. We wanted them to start understanding real estate investment at a young age. And so a couple of the times that we've bought properties, we express to our kids, hey, we're buying these properties for you, right? This is actually going to be for you. And we taught them about generational wealth. But one of the things, Rick, you said that we needed them to do is have skin in the game.
Yeah.
And so when we bought those properties in particular, when we painted, we didn't hire a painter, did we?
No. And what was funny about that is that we have painters that we recommend, excellent painters, or flooring companies or cleaners, and they do an exceptional job. And, Christina can put that in the link on Rick's Picks, and you can get access to all of them. But in that case, no, the kids are going to have the paintbrush. And did we have to go back over some of it? Sure we did.
Sure we did.
They were young. They didn't know what they were doing, but I'm telling you, they had sweat. They maybe in some cases had some calluses on their hand, and that's good. I think that's healthy, because I think that's what helps them be engaged, to have that skin in the game and to be a part of the process. And if they're not a part of the process, that's dad's deal. That's mom's deal. That's my parents' deal. instead of it being this is a family deal.
Well, and you made a decision a long time ago. If they don't work for it, they don't get it.
Yeah, well, I mean, that's how life is, right? I mean, you don't get up in the morning and go to work, then you don't have a job. You don't have any cash in your pocket, then you can't buy your lunch, right? So there's a real place of, I call it natural consequences, that you want to teach your kids the relationship between money. And at some point, Joe, they manage it all. And I can remember the day I printed, my kids were really young, and I printed off some of the properties that we own, and I distributed it to each of my daughters. Here's one for you, one for you, one for you. And I just took the property profile that's on the internet, and I said, I want you to manage this property. And their eyes, like the size of silver dollars, right?
I remember you telling me that, and I
And-
thought, oh my
and-
goodness.
And did I expect them to know how to do it? No. I just wanted them to be more involved, because I wanted to teach them what management and, in some sense, stewardship and responsibility was all about. And I remember, Joe, one of our tenants stopped paying rent. And it happened to be my oldest daughter's property that I had assigned to her. I put her name on it, said, if something happens to this home, you're going to be involved with it. And this tenant stopped paying rent. And I said to my oldest daughter, her name's April, I said, April, you're going with me, and we've got to post a 3-day notice to pay rent or quit on the front door. She started shaking, and we went up and did it together, and she had that experience of what it was like to post a notice. And the tenant paid, and everything worked out, and turned out to be a great tenant for us, and it all worked out. But she got that real life experience of what it's really like to own that property.
Well, and by doing that as a parent, if you're a parent out there, here's what it's also done. Like, I have an 18-year-old son, and one of the things he and I talk about is someday he's going to want to move out, right? And here's what I told him: start saving now. Yep. Why? Because I'll buy a property with you. You can rent out the rooms to your buddies. And then when you guys move out, it becomes a rental property for you and your family in the future. And so I read a book one time called Rich Dad, Poor Dad. Remember that book?
Sure.
And so, listen, it changed my life because no one taught me this stuff when I was a kid. And even what we're teaching you right now, if you didn't have somebody that actually stopped and explained to you how to really invest in real estate, and you wanted to get into it, it's why you feel like you have to buy one of those late night infomercial things to get in the game. That's not true. You just got to find the right people to partner with.
Well, you do. And you know, the irony behind those late night infomercials, I will just tell you straight up, they don't make the money on buying and flipping. They make the money on selling you the CDs.
Exactly
or
right.
Today the downloads, or today the thumb drive that they're going to mail you. Like, that's where the money, or their event, or that's where they're making their money. They're really good presenters of the material, but few of them are actually doing it. It's why, Christina, I told you I wanted to start Investors Thrive, because we wanted to authentically share what we've seen over 1,000 people do. We've helped 1,000 people invest in real estate. Some lived in the home, some bought them, flipped them, some bought them and rented them. We've helped 1,000 people. I've learned what is a good opportunity and what's not a good opportunity. We've seen people do it right. Yep. I've seen people do it wrong. And we can help kind of guide people to investors who thrive in the market. And real estate is limited. There's only so much real estate on this planet. There's only so much dirt. You don't believe that? Look at the city of San Francisco from a real estate perspective. It's all built out. There's no empty lots. In order to build something, you got to tear something else down. And because it's limited, we know the prices are out of control in San Francisco. Matter of fact, it's not uncommon for an entry-level property to be well over $1.2 million just coming on the market. That's an entry-level property. It might be a condo or a townhome or something very, very simple. And the reason that is because demand is strong and there's no supply. And real estate is limited. And so as the expansion, people move out to the suburbs, we see that in other areas as well. As they continue to expand, there's less and less available space, and the value of real estate continues to become greater and greater. And now what we're seeing, Joe, is this trend, and you and I have been spending a ton of time on this, on generational housing.
100%.
It's no longer that people are buying the 2-bedroom, 1-bath home, or even 3-bedroom, 2-bath. I now find people are buying like a 5-bedroom house, and then grandma and grandpa live over here, and maybe aunts and uncles live up here, and then maybe their kids live here. And for some people, that's exactly how they want to do it. And it becomes generational housing, And there are some opportunities to serve and help people there too.
Well, we're working on some things right now too that we're just in the early stages, but there's some things changing. If you're an investor in California, I would recommend definitely reaching out to us, because there's some things that are making properties, Rick, that we normally maybe wouldn't buy, right, now look really, really profitable because of the way the rental market has gone. And so you had asked a question that you sent out to me, Christina, about, what would I do right now in the market? Would I buy or would I flip? Right. And of course, like Rick always says, listen, we don't drive the market drives us. And so I would do both and. And the reality is that when we do the numbers, it's never what's happening. Don't believe the hype, right? Many times you're getting information, especially here in the Bay Area, you're getting information that's looking at a national or even a global real estate market. And what you need is a local specialist to help navigate you as an investor, because it might not be the right time to buy somewhere, right? But that doesn't mean it's not the right time to buy where you are. And you've got to have the right professional. And so for me, if a flip opportunity arose today that fit the criteria that we've already preset, we would buy it every day. Matter of fact, I knew that we were getting into this real flow of investing, Rick, when every time one of our listing agents puts a property up, you and I look at it and go, yes, no, yes, no. And we don't even have to say it anymore. We kind of just look at each other, because when you are an investor, you're always ready to invest in real estate. The other thing about investing in real estate is it's time bound. Like we said, you've got to get in the game. And Rick, right now in the market today that we find ourselves in, at least here in the Bay Area, it's so hot, right? And honestly, guys, cash is king right now.
Well, when you look at the markets, you can buy when the market's going up. You can buy when the market's going down. You can buy when the market's flat. But if I'm buying an investment property, I like when it's going up, because I buy it and I hold it, and generally it's worth more. And from a real estate investment perspective, that's one of the things that you're hoping to accomplish. So if you buy it right and the cash flow works, and we talk about the 888, looking at 8% for management, 8% for maintenance, and 8% for reserves, and you look at those 888s and the numbers work, it can be a great opportunity to buy property, because values are very, very strong and there's just not enough inventory on the market. And like I talked about with San Francisco being of limited real estate, there's only so much of it. It's not like cash where the government can print more. We are limited on the space that we have. And in certain areas, those spaces are completely built out. That produces a demand for real estate and a limit on the supply that continues to cause values to rise. And if you're a real estate investor, that's one of the great benefits of owning real estate.
Rick, one of my favorite stories on the properties that you bought is you actually own a rental property out in the Bodega Bay area.
Yeah.
And I love, because here's the thing that you need to realize too. There's some grassroots stuff you can do to find these properties. And that story was super awesome. Why don't you share with our viewers?
Yeah, so we own a vacation rental in Bodega Bay, California, and we actually had looked for a neighborhood that maybe one day we'd move to, and kind of a long-term plan. We're not ready to move there now, not in the next 3 to 4 years, but maybe one day we want to move in that area. And I had literally mailed a letter we found this beautiful community. They were all big lots and deer meandering up the hillside, and just great views of the Pacific Ocean. And we had mailed a letter to every homeowner in that community, every one of them, and described with authenticity of what we thought and what we loved the neighborhood. And if they ever thought about selling, we'd love to have a conversation with them. And Joe, we had 6 people call us off that letter. I mean, literally, it was a letter. I did have my kids sign the letter. I have 3 daughters, and I had them all sign in different colored pens.
Of course you did.
And so I wanted it to be real. You get letters all the time in your mailbox, and you're like, this is mass produced. Like, no, this was not mass produced. When you got probably a 6-year-old was my youngest daughter, and she's scratching it out with a red pen, that's the real deal. And we had 6 people call us. There's only 120 homes in this community, and said, we're interested. We looked at all 6 of those properties, and one of them was just a great fit. But it wasn't a great fit from a long-term rental, and wasn't a great flip opportunity. It was a good Airbnb or VRBO, a home away, a short-term vacation rental, and an opportunity for us to provide a respite for people in the Bay Area so that they could go there and enjoy the Pacific Ocean. It's an hour and a half from, the East Bay. And so, kind of when we talk about real estate collection, there isn't always okay, this is the only opportunity today. And as a real estate collector, you start realizing that there are many, many opportunities that exist. And if you're working with the right people and you understand what you're looking for, you can begin to see opportunities that would never otherwise be available. And today we have a guest in that home,
and even that one, right? We kind of talked about that one. That was a big step for you.
It was,
but it's actually become probably the most profitable, I would think, based on
honestly,
your rentals.
Joe, I think we looked in the last 2 months. I think we had 2 nights that were not booked in 2 months.
Wow.
I mean, every single night has been booked. But there are some things that you have to look at, and whether you're buying a flip property, you're going to want to look at what are the other homes in that area that have already repaired and are already in great condition. What are they selling for? If you're going to buy a property, and Joe, you and I've done this too, it's a long-term investment. Well, what's a tenant willing to rent the property for? What's a fair market rent? And if you're going to look at a vacation rental, well, what's the vacation rental amount that you can collect? How often are they rented? What's the marketing of those rental properties? What's the market? Can people find a place? Is it a destination location? Is it something that people want to go to, that there's a call for them to be there? I guess if I put a vacation rental in a community that nobody has any desire to go there, it's not going to be something that's searched for. What's the competition doing? Do the competition, when they're promoting the properties, do they take professional photography, aerial drone photography, Matterport tours? They got great description, make it all inclusive. Or do they just take pictures with their iPhone and throw them up on the internet, right? With the agent in the background in the bathroom. I'm sure you've seen it, the flashes going off on the bathroom mirror. Or my pet peeve, Christina, you've done enough of these podcasts to know what it is. It's when they leave the toilet seat up, right? Agents, it's like, guys, just drop the toilet seat down. But my point is that what are you competing with? Are you competing with a long-term rental, a surplus of rental properties on the market in that area? On a flip, are you competing with other properties that are all being repaired and going on the market? Maybe there's a surplus of inventory. On vacation rentals, are you competing with other homes that are well marketed, well presented, well advertised? Or are you entering into a market where you're the only game in town? And honestly, I love that position. I look for that position in everything we do. Because we always talk about, when we talk about real estate investing, we love talking about the front end. Like, this is what we're looking for. And everybody asks me, what are you looking for? What do you identify as a great property? I like looking at the back end, meaning that once I have it, I know I can get it ready. I know I can make the remodel. I know I can have it prepared. I know I can market. I know, what am I competing with? And if you look at the back end of after you've made the repairs, what's it going to look like on the market? If you can find a market where you provide a unique value, a unique property, and you provide it better than anyone else, whether it be through your marketing materials or by your pricing or your presentation, or our Airbnb out there, our vacation rental, it's fully equipped. So you can go there and you can stay there the whole time. You don't have to go out to a grocery store or restaurant, or you don't have to go out to, and find things to do. Everything's on site. Well, that was a value that community can provide, that property that wasn't available for the others out there, and that we could capture, on the back end.
One of the unique things too about investing in real estate right now too, Rick, talk a little bit about how people are pulling money together, because there's some guys out there doing stuff like that to get people into real estate that in some ways I really don't feel like they get into real estate.
Well, I think that one of the most, so you've got lots of people that are asking to pull money together. They might call it a REIT, a real estate investment trust, maybe a syndication. It might be a unique partnership. I'll just tell you that it is, you have to have the right person. If you have the wrong person, and what you're looking for, there's lots of things you're looking for, but you're looking for people that, operate the same way that you do if you're going to be working together. But you're also looking for people on their time horizon. You buy a long-term rental and your plan is that this is going to be something that's paid for free and clear to send my kids to college. Mm-hmm. And the partner, their aspirations is in 2 years, I'm going to sell it, and realize that that doesn't line up. Those may be or it might be for your retirement and they want to sell it immediately, or they might want to hold it for their retirement and you want to sell it. And that causes a lot of conflict. And so generally speaking, you've got to really get the right joint venture, the joint tenants, what we call it, the right tenant and common agreement, so that you can really be of the same mind before you work together in that capacity. And oftentimes it doesn't make sense to do it with a partner. You know, Joe, you own properties without me. I own properties without you. Like, we don't always come in that environment. And there's times where it makes sense to do so. And there's times that it doesn't. But you really got to make sure that you are equally aligned, that your time horizons are clear, and the expectations are clear. Okay, what am I going to do? What are you going to do? And what does that look like? How much are you going to bring to the table? How much am I going to bring to the table? Those things have burned through many of relationships, many of friendships. We've been doing it over 20 years. It's honestly, Joe, I would tell you, it's strengthened our relationship.
For sure.
Because we're just rubbing shoulders in every venue in life that we're walking in, and including business and investments and so forth. And it's strengthened our relationship. And I think one of the things that's been just honestly is unique and just been a great blessing is I always looked at it as, there's no way Joe's going to lose on this deal. Like, there is no way in the world I'm going to let Joe lose on this transaction, whatever we're doing.
Mm-hmm.
And Joe says the exact same thing. He's like, there is no way Rick's going to lose. And when you come at it with that mindset, and I know it's the opposite, everybody else has the with them mindset, like the what's in it for me.
Mm-hmm.
But when you have a relationship and you're like, there is no way this person's going to lose, I'm not going to allow that to happen. And that person says the same thing about you. You've got a unique relationship that you can do life with. And here's the thing about whether it's business or investment, you can go fast by yourself. Like, I can run and I can do all the things that I want to do, but you are going to go far with people in your life. And, Joe, we have a team now of, we're knocking on the door of 50 people. We're nearly at 50 team members that are helping our clients and helping them find investment property, help them sell investment properties, and help people find their home and so forth. Because you can't, if you want to go far, you're going with other people. Nobody succeeds alone. And you need people in your life that you can, and it doesn't mean that everybody's got to be in that, in some sense, that inner circle or on your phone. Remember the commercial, be in your five, right? Like, not everybody's got to be in your five, but it's going to take people in your life that can help you. And they have some ideas that you do not have. I'll tell you, where we're at today, I think I do a lot more listening in our conversations. We got some other great people. We could have the whole room filled, Joe, with
For
people
sure.
that we're working with that I just think the world of. And I'll tell you, I am listening deeply because I realize I have a preconceived idea. I have a preconceived notion on what I'm going to do and how I'm going to do it. And sometimes they come up with an idea and I'm like, duh. Of course, that's how we ought to do it. And I just didn't see it clearly. I love what one of our mentors says. The smartest person in the room, it's the room.
Mm-hmm.
You get the right people around you in the right room, and that's the smartest person. It's not the one person that enters in or the one person that leaves. It's the collective knowledge of the people that you hang with. I tell my kids this all the time. Hey, you're going to be like the people that you spend the most amount of time with. And they're going to be like you. So be very intentional about the people that you let in your Fab Five.
For sure. And I would say one of the things we'd be remiss not talking about this with COVID-19 and some of the things that are even happening in our state right now. Guys, many times an investor, we can't just think of it as, I'm an investor, I want to make some money. Actually, sometimes investors are the ones that come in, Rick, when there is situations where families are displaced, things of that nature. And they're the one that actually comes in, buys that property, right? And really becomes the one that family says, hey, that investor came in and helped us. And so there's also opportunities, I believe, today and more on the horizon, guys, than you might think. And without getting into some of those things today, I would just tell you, if you have questions about some of the things that we've talked about, we'd love to take any questions that you might have. Or you can always reach out to Rick or myself. We're here definitely to answer any questions you might have. But Christina, do we have any questions from our panel or?
No, but we're actually out of time.
Oh, imagine that.
I know. You guys have been awesome. Any final thoughts? Final words?
When Joe talked about, the market and COVID and all the things that we're looking at today, I would just tell you, money doesn't disappear, it moves.
That's it.
And Joe talked about the book written by Robert Kiyosaki, Rich Dad Poor Dad. There's another book written by Ken Blanchard. It's a real man-sized book, Joe. It's about this thick. It's very small. It might be 80 pages, and it's called Who Moved My Cheese?
Yeah,
and it's written by Ken Blanchard, and Ken says, look, cheese, it doesn't disappear, it just moves. And the most successful people in life, they tend to move with the cheese. They tend to recognize there's no more cheese over there. It's dissipating, there's less of it. And when markets shift, they move where the new cheese is, where the new opportunities are. And if that's something that you're interested in, listen to our podcast. We talk a lot about it. Our previous podcast talks about the 10 ways to buy investment properties, the 10 opportunities that I see that's out there. And there's probably a dozen more. But there's a lot of great resources that you don't have to go and purchase those late night infomercial materials. We'll tell you what's really happening right here in the Bay Area in Sacramento County. And we hope that this was of value to you today.
And Joe, you talked about your mentor who lived in Clayton and said if you did 6 transactions, you could have a house like mine. So can you just tell us where you live today?
So that's hilarious. So funny enough, I actually just moved to Clayton about a year ago.
Bam.
And I literally live down the hill from that man's house. And so it went a different direction, but when I stack it back up on top of it, it was a lot of hard work. But yeah, we live in Clayton. And so here's the other thing. If you have a real estate dream, again, get in the game. It's not going to happen overnight, but once you get in the game, at least you can actually start taking strides to see that dream come true.
Thank you. I just had to get the little ending part of that story. So that's all the time we have for today. Thank you, Rick and Joe, for sharing your experiences and for helping us to make the best decisions. This has been so invaluable. Joe, do you promise to come back?
Oh yeah, I'll definitely come back.
Awesome. So join us next week when we talk about what makes the Rick Fuller team different. And we're going to have the Director of Expansion for the Rick Fuller team on, Brian Donnelly. You'll learn how our team works and what makes us different and how we're finding success in this unique market. So be sure to subscribe to the Rick Fuller podcast and to Agents Thrive on our Facebook page. Thank you for spending a part of your day with us, and we can't wait for you to join us next week. Thanks, you guys.
Thank you. Bye-bye.
Bye.